everybody for the LeAnn Riley's Real Estate Investing Made Simple Club. And today we interview live experts and leaders in the real estate investing world. And I'm LeAnn Riley. I'm a broker and a real estate coach, and I lead the Encore investment team of realtors here in the Twin Cities, Minnesota. And I built a multi-million-dollar portfolio in residential, multifamily, condo development, commercial, and vacation properties. I like them. As a national coach and a trainer, I help people get started or scale a portfolio without the confusion or fear with my proven profit formula coaching program. And check out my YouTube channel too, and go ahead and subscribe. Lots of education on there about real estate and who to work with and how to do it. So remember one other thing, stay on after our discussion today, because that's where we have some networking. You don't even have to go anywhere, and you can even be in your jammies if you turn the camera off, but stay on and you actually have a chance to introduce yourself. If there's any deals you want to talk about, that's great. And we can meet each other. So remember to do that. And so today, what's the topic? Today, we're going to talk about what the hell is going on in today's crazy real estate market. And I have with me here today, Eric Janson. He's our guest, and he's actually the operations manager here with me at the Encore investment team. So tell us, what else about you do we need to know?
Well, I mean, I've been, as far as real estate, and I've been involved in real estate for about 10 years now. So I've been around the block for a little while. I got started, I think like a lot of people did in investing, by listening to some guru, flip this house, all those kind of things. I went to some training and got into wholesaling, did a lot of wholesaling over the years, did a lot of rent to own properties, worked with sellers, worked with buyers, putting rent to own properties together, and kind of, worked with a lot of different investors, including LeAnn, through the years. And eventually got my real estate license about 5-6 years ago, and I've been doing that and working on the Encore investment team now for quite a while, and live in Eden Prairie, very close to LeAnn. And we kind of have our headquarters here, and we help investors and anybody really buy and sell properties. So that's kind of who I am and what we do.
And we did a bunch of research, so we're going to share it with you. And what we're going to talk about today is, will the market crash in 2022? When will this market cool down? How high are the interest rates going to go? Should I wait to buy? Should I wait to invest? Should I wait to sell? Well, I don't like anybody waiting, and we'll tell you why.
Yeah.
So first, I always share, how did I meet these people who are guests? And I actually met Eric through an investor and some training I was doing.
Mm-hmm. Yeah, I was actually in the seat. It was obviously pre-COVID. There was no Zoom calls, but we were in a seat in a training, and I was working with another investor. He was actually doing some of the training, and then up there's this lady named LeAnn Riley. I didn't know who she was, but she seemed to know what she was talking about, so I paid attention. So that was the first time I met her, but she didn't really meet me until later. So
no, that was a lot of years ago, guys. So the thing is, real estate investing, the fundamentals are the same, but boy, you have to get creative in a market like today. Mm-hmm. So since then, we've done some deals together, and now we work together every day. Mm-hmm. So networking is so important. I'm just telling you folks that, because it's the secret to prosperity in real estate investing. I just got a call today from a guy who doesn't live here anymore. He's got an off-market property. That's networking, folks. And right away, I perked up. Actually, he texted me a couple of days ago, and I was right on it. Call me, tell me what it is. We can take care of that. So it's, again, relationships, and it's the way that you get things done in the real estate investing world too, and how you solve problems, because that's what's going on today. So I just wanted to remind you, stay on after the call. So now, Eric, what's your latest real estate deal? Let's just hear today.
Well, I had an interesting story today. So I had a listing or have a listing that's under contract. It's pending. It closes in a couple weeks. And the buyer of the property was coming out to do some, some measurements. They had the flooring guy there, the painting. They were, it needs a little bit of work. So they wanted some guy to come out and do some quotes to kind of get an idea of what they're looking at and get that set up, earlier rather than later. Well, I get a text message from their agent saying, we can't get in the property. The lockbox is not numbers anymore. It's letters now. So I'm like, what are you talking about? Are you at the right house? I didn't change the lockbox. I know the owner hasn't been there. The property's vacant. Nobody's there. What are you talking about? So then I get a call and she's like, yeah, I can't get in. The lockbox it's in letters. And I said, are you sure you're at the right property? You're at the right address? And she's like, yeah, I'm at the right address. I said, all right, well, I don't know what's going on. The only people that would have had access are other agents. So I guess I'll go out there, and I had to go to the owner's house. It's actually inherited property. So she's inheriting it from her parents that passed away. And so I went through probate and all that kind of stuff. Everything was good, but I had to go out to get the key because somebody put a different lockbox on there for some reason. So I got the key, went out there, went to open it up, and the key doesn't go in. Doesn't go in at all. So the locks that are out also changed. So not only is there a different lockbox on, but the locks are also changed. But I was smart enough, I think, to ask for her to give me the garage door openers. So I tried those, nothing. Could not get into the property. There's a little sticker on the window that said that basically they had winterized and yada, yada, yada. Basically sounded like it was a foreclosure situation, which I knew we weren't in. So I didn't understand what's going on.
So here's the good news though.
So
a good realtor,
yeah,
he solved it. It's not like it's fine.
Yeah.
And that deal is going to close. And my point of asking him this today is, you'd be surprised what we do behind the scenes. And that was a little sneak peek. Okay.
Yep.
So I know you want to find out what we have to say about the market. So I'm going to move to, we have a real quick poll here. And it gives Eric and I a chance to see who's listening. So we make sure we're speaking straight to you and we can answer your questions. So can you start the poll there? And all you do is pick, what type of real estate investing interests you, and make a vote there. If you're sitting at a computer, if you're driving, that's okay.
Yeah, you can pass.
Yeah. And I'm going to leave this up for 30 seconds. You guys are all voting. I appreciate that. We got quite a few people on here. I recognize some of those names. Brandon and Adam are here, and Brooke. So, okay. Let's go 3 more seconds and then we're going to end the poll. Oh, they're still voting. It's moving. I can see it's a moving target. This is great because there's so many strategies in real estate investing. And this even gives you guys a chance to see. Go ahead and end the poll there, Eric. So here's what the winner is here. We got some short-term rental people. Looks like that's the top category.
Short-term rental was the top.
And buy and hold and fix and flip. We got both of those. There's some student housing, some BRRRR, and how to get started. So a combination here of different strategies. Okay. And then just so you know, now when we do our presentation, we do have some slides for you today so you can understand what we're talking about. And we will take questions, and what you want to do is put them in the chat box as we go along. Can you raise that little section so I can see it? Where is it?
It's right here.
Yeah, but it gets full.
Oh,
I'm just getting ready for the chat box. There you go. There, now we got a nice big chat box. So let's get rolling then, Eric, and get started. So first we're going to talk about, remember, what the hell to do today. So the first big question we get every day, all the time is, will the market crash in 2022?
Right. So the answer to that from a lot of the experts and looking at a lot of the data is no. So what we're looking at, and I'll share screen here and show you a graph of this. The biggest reason why is because what's driving the prices is the fact that we have low inventory right now. So as you can see on this graph, this is a graph that looks back 22 years and it shows the inventory levels throughout those years. So as you can see in the red here, this is where we are right here. We're at a historically low inventory level, which is driving the prices higher and higher. So it's different than it was in the crash time, as the inventory was much higher back then. The other thing you got to keep in mind here too is there was a lot less population right here as there is today. So that's making this even more skewed nowadays. So yeah, low inventory is driving the price. So it is different than 2007, 2008. And we'll get into more of that as well. So it's not looking the same.
Okay, and here's the thing. We got here because there was a lack of construction from 2010 to 2020. Think about it. Everybody got scared after 08, 07, 08. And even people were afraid to build new homes, and the builders were afraid. So that's where it started. And it went on for so long. And the population growth was 50 million in this whole chart. It grew by 50 million. But the construction wasn't there to keep up for the need for housing. Then you throw in here in 19 COVID and some civil unrest, and right now throw in the Ukraine war. You know, there is outside factors that do affect housing, but this is not a bubble like 07, 08, and we'll say a little bit more about that. What you will see in 2022 is some cooling, but not a crash. That's completely different. Okay.
Question, or should we wait?
Okay, so
We'll get to that question. So if you just give us a second.
Yeah.
Basic questions. Have you
yeah,
noticed
we're
any
going to talk
slowing-
about interest
slowing due
rates.
to interest rates on the rise, and we'll
Yeah.
talk about that here in a couple of slides. So bear with us on that one. So kind of the next thing I want to show you guys on the slides here is continuing this question of will the market crash. I want to show you another example of what we're really looking at. We're looking at a cooling in the market, not necessarily a crash. So get this screen up here, this slide up. So what you're looking at here is over the last few years, home prices, and particularly I want to point you to this column here that talks about home prices and how much they've gone up. So this is the home price value increase year to year. So 5.7, 4.9. And as you can see with COVID, things shot up about 9.1, 16.9, kind of depending on where you're at in the country and what you're doing. It could be even higher than that. Obviously, in some places 30% or more. So we saw a huge uptick. And again, it was because of what we talked about, low inventory, higher pricing. There were some other factors in there as well. And that was people were getting stimulus checks, wages have gone up, so people could bid up properties. So it caused this spike here. But what we're seeing and what's being kind of forecasted moving into the rest of 2022 and into 2023 is that not necessarily the market going down, but it's not going to grow as fast as it has been. So what we're looking at is an 8 to 10% increase in home prices for 2022, a 4 to 5% increase in 2023, back to kind of normal ranges in 2023. And then it looks like it's progressing on forward like that all the way to 2026. So that's kind of what we're looking at. And that's what I wanted to kind of show you in this slide.
So that's encouraging. They're not going to keep going up at this outrageous rates, but they are going to be going up, just settling down, cooling, like we said.
Mm-hmm. Yep. So we wanted to talk about too, continuing this and just to kind of reiterate a few things and point out a few more things, but talk about the difference, because a lot of people point back to the 2007, 2008 timeframe. So I wanted to kind of look and see what are some of the differences and why do we say it's not like that? And what are those factors that are making us look at that and see, say that. So in 2008, there was a lot of building going on, a lot of building prior to that. People were building like crazy. So you had a situation where there were too many homes. And like LeAnn had discussed, from 2010 to 2020, there was a shortage. There's actually like a 5 million home shortage right now in new construction, which is a lot. That was basically from that 10-year span, and they've started to ramp up, but as people know, there's been issues with ramping that up with supply chain issues of lumber and things like that. So underbuilding has been more of a factor here, which is the low inventory.
One of the other things I want to say about '08, because guess what? I had built this big portfolio in real estate and starting in the '80s, and I actually never had my real estate license, just so you know, till '07. What a time to get your license, right? Right during the crash. But I didn't even know it, like it didn't matter. I knew how to sell real estate, and I had bought and sold so many properties, it made sense to get my license. So the thing is, I've seen a lot of crashes or ups and downs. It's part of the cycle of real estate. And why I love investment property, it's about cash flow, because it doesn't matter if the market is up or down as long as you're cash flowing. That's always the premise I've believed in and built portfolios on. And I know there's people on here listening here. I see some of the panelists who would totally agree, because that's what they've done and built their way to wealth that way. So back there in '08, the big old problem was those darn subprime mortgages. Okay. They were giving mortgages to anybody and for anything. I had a friend who, she said, wow, it's a candy store. And she bought like 5 rentals with 0 down because you could. And, it didn't turn out pretty. I mean, she had to hold those for a lot of years in order to actually pretty much break even. And it was a lot of hassle, in fact, she moved to Florida before she was able to actually sell the properties and come out even. So it did take a lot of people down. And what's different now is that tightened the whole mortgage market. And now there's regulations and restrictions, and, it's difficult for first time buyers or people right on the edge to even get a mortgage. So that changed that and shut down that whole thing about subprime lending. Let's see here.
Yeah, the other thing is like we had talked about, there's still a lot of buyers, more buyers, again, with the low inventory. One thing that's a note of interest is the foreclosures. Foreclosures have been a topic that have been talked about a little bit, with the forbearance and all the things that went on with COVID that the government gave people relief on. We have seen an uptick in foreclosures this year, but note that even though we've seen an uptick in foreclosures, it's still lower than we were having as far as foreclosures pre-COVID. So we're actually lower than our normal foreclosure rate would be, but it's higher than the last 2 years because we had very little to any foreclosures the last 2 years. The other factor in that is that lenders are working with not buyers, but owners to make sure that they can keep their homes. So foreclosures have moved up. We have seen that recently, and that trend will continue, but it is lower than before. And plus, we've got a really low unemployment rate. So the factors are different than they were back in '08.
On that unemployment rate, I did just check it, and I was really impressed. Job growth is really important for real estate. It's a number you have to balance. You want to watch home price increases versus job growth. They kind of go together, okay? And so the unemployment rate is down to 2.5% now, which is the lowest since 1999 here in Minnesota. The national rate is 3.6%. And the other thing I want to say, they keep using the word, are we in a housing bubble? Well, a bubble is an unsustainable period of house price growth generated by artificial demand. That's what we're talking about with that loose underwriting and speculative buying. We don't have that going on now. What we have more of is something called a housing boom, which is rising prices. We got that, and rising rates. And what that does is undermine the affordability of those people just trying to enter the market. And the shortage will remain and keep the appreciation positive. We've got all those factors going right now because our inventory is low and it's staying low. It can't catch up anytime real soon. It's going to be a slow ride. So that keeps the appreciation for those of us who do own, which that's the interesting thing. They printed money. So we had a little bit of extra, and people have more home equity now than they have in years. I think we have it on another slide. So I'm jumping ahead.
Yep. Renee asked a question about any thoughts on the delayed foreclosures and evictions due to COVID moratoriums. Maybe that's part of the uptick. Yeah, that is the uptick. So since that's ended last year, foreclosures take a while. They don't happen overnight. They take some time to go through redemption period, and have the sheriff's sale, and you got to fall behind in your payments for a period of time, all that. So it takes a period of time for all that to kind of catch up to us. So we're now starting to see that uptick. But I guess what the point I was making is it's still lower than before COVID. So even though we've seen an uptick, it's not like this skyrocketing uptick. It'll help some in giving more inventory to the market, but it's not going to help enough. It'll still be short.
And the reasonings that we uncovered around that is the loan modifications. They really did do great workouts with people who couldn't pay during the pandemic. And then, so those didn't turn into foreclosures. They just were modified loans. And that helped, people keep saying, oh, where's all those foreclosures? It's such a small, it's like 3 or 4% of the market. It's nothing.
Mm-hmm. But we are seeing the uptick. So that'll probably continue as we go forward. So another question that we get a lot is, when will the market cool down? If we're not in a crash and it's going to cool down, when are we going to see prices cool down? Because they seem to keep going up. So, a lot of people are talking about the fall, and the research I'm looking at is saying no, that prices will continue. I pulled a little article here from Narada, and they talked about how prices are not going to, continue to go up. Basically, they're not going down in 2022. So that's kind of what we talked about before, that 8 to 10. They're not going to go up as fast and crazy as they have been, but they're going to continue to go up. So, it's going to take probably until 2023 before we really start to see that getting more into a normal range of the 4 to 5% that you typically see on average. So the other question we had earlier was about interest rates. Now we'll get into more on that. So I'll pull this slide up.
Yeah, and Renee asked about interest rates. Do we see any reaction? We do. We're in the real estate market every day. Mm-hmm. So if the rates rise on Wednesday, we see a result on Thursday. Somebody cancels a showing or whatever. So it's very slight, but again, it's that bottom end of the market where it's really going to hit. But Eric does have a good slide a little later here.
Well, here's the slide here. So
okay.
Here's the slide everybody's looking at. So this is the mortgage rates over the last, going back to 70s basically. So going back to quite a ways, and it shows basically the trend of how the mortgage rates have gone year over year, kind of along the way. And you can see right now we're in this spike. But if you look down across, that's still pretty low compared to where we have been in the past.
It looks like 2010 once we were
10-ish, where we're at right now. So mortgage rates are still low comparatively speaking to the past. But you see this big spike in the 80s, and LeAnn, I know you have some. You've experienced a little bit of that, right?
Yeah.
And so
I got to tell you,
why would you buy it right here, LeAnn?
I bought one of my first properties right there, the first rehab that I did. And it was a triplex in South Minneapolis. I know that building. Anyway, it took about a year. This was, the first project is always the hardest project, just so you know. And it was a triplex, and it had a fire, and we were rehabbing the whole thing and going to get rich, the story. Anyway, we barely made it to the end. Practically leveraged everything we had and could hardly eat, but we made it to the end. And then we were so excited because we got an 18% interest rate on refinancing that, but we also got a check for $120,000 cash out refi with 18% interest, and it didn't matter because that building cash flowed over $1,000 a month. And then what we did is rinse and repeat. We did that same thing over and over and over again, rehabbing condemned buildings. So it can work. It doesn't matter what the interest rate is. It's more about what the cash flow is. in the way that I invest with buy and holds.
We'll get back to Brandon's in a second. We do talk about that a little bit. So just going back to that slide, just to show you where interest rates are at now. So basically what LeAnn was saying is even here you can make money. So not that we're here, but no matter where we're at. Now, I don't know if this is going to work.
We're still historically low, folks. Just really remember that.
Hopefully everybody can see this. I just went to a link and it just shows today's interest rates, you know, where we're at 5.4 for a 30-year fixed. You know, ARMs are at 4.5 and the 30-year FHA is what, 5.1. So just a real-time look, same graph as we had before. So it just shows you where interest rates are at today. They are on the rise. They're basically, you know, kind of the gist of it is they're going to continue to go up throughout the year. You know, Brandon, you know, saying 1.25% is what he's kind of saying here in the chat. You know, I'm hearing estimates of up to 7% potentially by the end of the year they could go to. So that's what we could be looking at as far as interest rates. They are looking to increase again. They'll have another meeting, I think, in June. And then, you know, from there, you know, they're just going to keep talking about it and potentially looking at increases. So, but again, they're historically low. The other thing, keep in mind, is when they do raise the interest rates, they don't really have an effect on the market for, there's kind of a lag there. There's a 4 to 7 month, 6 month period of time before it really has the effect on inflation and all the other factors that you're looking at. So
Brandon has a really good point here, and I'm going to just read. He says he would like to say, even at the higher interest rates at 5%, with inflation at 8%, you're still up 3% just for holding the debt, not including cash flow with amortization pay down. You know, that's the thing. People get it, that real estate is still a hedge against inflation. It's a good place to have your money, because if you just have it sitting in the bank, it's not doing that well. So there is going to be some more upticking. So, you know, that's why you better, you know, buy now.
Yep. And so now we get into the questions of, well, you talked about buying. So one of the questions is, should I buy right now, or should I wait? Gallup just did a poll on buyer confidence in the market, and 70% of buyers right now feel that it's a bad time to buy. And that makes sense. You've got high interest rates, high prices, you know, you're in multiple offer situations. You got to kind of give everything up to try to get a property right now, it feels like. So is it a bad time to buy? But my question is, will it get better at least soon? And what we're looking at is no. So so one of the things we want to show you, I don't know if you wanted to touch on that at all, LeAnn, but as far as waiting and what that can do for you as a buyer.
Yeah, there's a lot of information about that. And we found a chart that'll almost scare you. So let's show you the chart.
Yeah, it is a scary chart. So this is a chart that was basically is now. This is real time. And this shows you the difference between if you bought a property a year ago at the 3% interest rates and a $400,000 home, what that home would cost you today. Now you see that it's $400,480. It's gone up in price. It's gone up in interest rate. So that same home is now like about $900 a month, potentially more for you than it was a year ago. So what we're seeing is that our interest rate's going to continue to go up. Yes. Our price is going to continue to go up. Yes. So is it going to be a $900 difference? Probably not, but we don't know for sure. But it's more than likely going to be more. So the longer you wait, the more this principal and interest payment continues to rise.
Yeah. So flip back to us.
Yep.
So here's the thing. There's also creative financing options, and you're going to start to see them, the ARMs. What's that? What that means, it's an adjustable rate mortgage. You might even see mortgages going out to 40 years now. That would have your payment lower. You see what I mean? The mortgage market will adjust a little bit to help. arms aren't the worst thing. You know, it means that your rate is fixed for a certain time, or it can adjust every year or every 2 years. It has some terms, but they're not terrible, and they were around a lot. You had one.
Yeah,
right?
I did have one years ago. We had one and it was a 3-year arm, and we ended up basically moving at the end of that time frame. So we didn't really have the interest rate hike that you would see. So you're looking at either selling in that time frame or refinancing. So you gotta be a little bit careful when you're doing it. But it is an option. Again, banks aren't going to want to lose money. So they're not going to want to just have everybody sit on the sidelines. They're going to want people to get in the game. So they're going to try to find ways for people to have affordability in the market. So you're going to see more and more of those things pop up as time goes on here, I think.
Definitely. And, you know, the buyers are all, they're nervous. You've written 3-4 offers. They haven't gotten them, you know, should I wait? Should I wait? But then, you know, I had one who was bound and determined to buy before last Wednesday when they went up, but it didn't work. But wanted to beat those rates. You know, here's the thing: you need experienced agents, experienced mortgage people. You need people who understand what's going on so you can get those offers accepted. And you need to have strategies of how to find properties that other people aren't looking for, because there is a lot to that. And that's what we specialize in here at our team.
Yeah.
What did that Gallup poll say about now is a bad time to buy?
It was just basically, it was buyer confidence. So it was what the buyers think. And I get it. If you're a buyer, it's not easy. But again, my question is it going to get better right now? I mean, it looks like it's going to get worse. So you don't want to wait. You want to, you know, get in the game and buy. So that leads us in kind of the next thing. We talked about buying. Now on the investor side, you know, we're investor real estate agents. So, you know, is it a good time to invest? Can you make money with investments? Is it worth it? Or should we just take our money and put it in the stock market, put it somewhere else, Bitcoin? What? So
yeah, that fell too.
So,
you know,
what should we do?
I see Lisa on here says it's a good time to develop my land into 40 homes and 11 commercial spaces. It is a good time. So should I wait to invest is the next question.
Well, everybody's scared of, you know, everybody's talking about inflation. Inflation keeps going up. So, you know, what advantages are there to investing when it comes to inflation? So I'm going to put the graph up here, and LeAnn can kind of talk about that a little bit, about what inflation's been looking like. So I'll explain this graph a little bit. So this is going back over the last 10 years, inflation rates. This is kind of an average year to year thing. 2022, obviously we only have 4 months in, full months in. So that's where we're at right now. But you can see we had this, you know, pretty big spike for inflation the last couple of years here. So that's scaring some people. So should they invest in real estate? What do you think, LeAnn?
Well, I always say it's always a good time to find a good deal. And you need a savvy realtor to help find those deals or the off market things. But I think I told this story before we went live here that, you know, I have one of my coaching students who bought something. He's just closing today, and it is a contract for deed, 0 money down, and he's going to cash flow $47.50, I think he said, a month. That's a deal in today's market. You know, you got to know the right people and you have to network. It's possible. So I say you better not wait too long.
Yep. And basically investing is a hedge against inflation. So that's kind of what that graph showed. And I can go back to that quick. This is actually the updated as of today graph of where inflation's at. So we were at 8.5 last month. They dropped to 8.3. One thing to note on that is that's the first drop in 8 months. So are we at the peak and now are we starting to come back down? We don't know for sure. But the good news is it did drop finally after 8 months of continually going up. So, you know and that's be in a better position shortly.
That's why they're raising the interest rates, is to try to get that to get more in line. And the goal is to get to inflation to come down to 5% by raising the interest rates. and they stopped printing money. So at least one little down is a good news for today, right?
Yep, yep. So we're moving in the right direction on that, and investing is kind of the way to hedge yourself against that. So, you know, when you talk about investing, one of the things that people talk about too is what about rents? You know, if I'm renting my property, you know, I'm a landlord. How are rents looking? Are we okay there? Is that going to start to change? I mean, what are we looking at for rents? So I'm going to show you another graph here. As far as this is a nationwide graph of rents, and what this shows you is where rents have increased over the last year or so here. And this is just basically anywhere where it's shaded in a different color, rents have gone up considerably. You know, more red or orangish, down here in Florida, you can see rents have gone up drastically in some of these areas. But I pointed to kind of where we live, and that shows you that rents have increased, and rents historically typically increase almost every year. Not for sure, but they're pretty solid as far as increasing. So that's a good thing for an investor, especially a landlord.
And this is why I say we watch the job market, because rents are tied to local incomes. Okay. Mm-hmm. So they can only go up if the income or the job growth is up. Okay. So when the real estate prices rise and the income doesn't stay in sync, that's actually when the value fails, or falls. And the values of the properties are holding at that higher because we have the income rising from the job growth. Okay, if that makes sense. And you can actually look up from the Census Bureau by zip code, you can look up job growth. So if you're thinking of buying in a certain neighborhood, that's maybe something you want to look at, is what's going on in that neighborhood if you're concerned about your rents. Okay.
Yeah, because job growth is it almost runs in exact correlation with wages. I mean, I've seen graphs of it, and it's just they parallel each other. When wages go up, rents go up. Wages go down, rents still kind of, they kind of hover, but they don't usually go down. So,
and even energy prices affect this. What's the effect on the economy? So this is why we say they can't just keep rising. So is there this recession? And that'll stabilize everything. Maybe there is, maybe there isn't. I guess I was looking at is the economy here in Minneapolis growing? And I saw that we've added 98,700 jobs in 2021. That's a lot of jobs, you guys. It's a 5.3% year-over-year expansion. That's keeping up. In fact, we're the 17th out of the nation's 54 largest metro area in job growth. That keeps us a good place to invest in the Midwest.
So I think the biggest takeaway with investing, especially, is making sure that you should have cash flow in this market. Now we're saying what we're saying about the market, and there's a lot of people saying the same thing, but you want to make sure that you have cash flow in your properties, because that's going to be the thing that's going to keep you afloat. If you don't have cash flow and you're banking on prices are going to keep going up, that's kind of a little bit, that's risky.
Well,
so
and
no speculation buying.
Here's the cool thing: your mortgage stays the same while the rents go up.
Right.
So
that's kind of.
Here's another thing, guys. As these higher prices in the housing goes up and this affordability category is struggling, guess what? Those are more renters.
Yep. Yeah, exactly. When the people, the first time buyers can't buy anymore, what are they going to do? They're going to rent. So there's going to be more renters in the pool, which would drive demand, will drive the price up, drive the rents up again. So that's a good point. So, but when you're looking for investment properties, you need to have somebody that can help you with that. Not every agent out there understands how to put those numbers together, how to know what a good deal is, and That's what we specialize here. We've got a full team here, and I'm going to put us up on the screen. It's not just the two of
Yeah,
us.
it's not just us.
We got more here. So, and we're, maybe adding more here soon.
Yep,
So
we got a couple more coming. So we have Tammy Love and Adam Marzal. So just in case you run into one of us, say hi, and we'd be happy to work with you. So now we're going to talk about the seller side.
So you can get our website down here in the bottom if you want to find out more about each individual one of us. So moving into, yes. So is it, well, we do have one more slide on investing if you wanted to show.
Yeah, I love this one because, it's building a house there. And this is why real estate is so good, because the property is appreciating. And we didn't make this up today. This hedge against inflation little square was on there. I used this slide 3 years ago. So nothing's changed, right? There's cash flow, there's tax benefits, and the renter is paying your principal down. That is the win-win, and that's why it's a path to wealth.
Yeah. So now we get more into the other question is, should you sell? So we've talked about, should you buy or should you wait to buy? Should you wait to invest? And now, should you wait to sell? We've talked about prices are going to continue to go up over the next several years. So maybe it would make sense just to kind of wait a while and get more and more appreciation over time, right? I mean, that would make sense to me. But there is something that's going on in the market that as a seller, you need to be aware of. So and we've kind of talked about it already a lot, but this graph starts to show it. And I've seen this in other graphs around the nation too, where this is basically how many showings there are per listing. And you see there's been a spike. And what I'm pointing out here is there's a decline. Now it's a minimal decline, but this is the path. And this is what a lot of experts are seeing is going to start to continue to happen, is this demand is going to continue to tick down, each and every month a little bit as time goes on. You got to keep in mind that this tick down too is our spring market, where we're typically kind of going up. We're actually going down in this one. So keep that in mind as well. But demand is decreasing. So, your opportunity to get those multiple offers and get the craziness right now is still available.
I want to say something about his chart too. If you looked at the chart, it went up. Yeah, let's go back. So it started rising in 2020 during COVID, kind of, which is really amazing, right? Remember, we were shut down in March, and then it started going up, more showings per listing. We could barely get out. We didn't even know if real estate was going to be an essential service, and now showings are going up. And what fueled that? Remote working. People got it, that, wow, I can now move out of the city. I can now live wherever I want. I can have a bigger yard for my kids. Or, oh my God, we can't all fit in this house. We have to do something now, and that really changed industries, this whole back to work, the hybrid process. It's really, really shifted, but there's definitely an opening up of you can live where you want to live now.
Yeah, I've been out in the market a lot, obviously, over the years, especially this year. One thing I've noticed this year that I've noticed more than other years, even during the COVID years, is that, and it's continuing to increase, is more and more people, when you go to a showing, you find out that the owners work from home. That's kind of a theme that you keep seeing over and over again, is owners work from home. So, you can see their offices set up in the house, the agent might even say that, hey, they work from home, so showings are a breeze or whatever the case is. But I've seen that trend, continue to tick up ever since COVID. So I think it's something that's kind of here to stay a little bit. But
oh yeah, we were at a listing appointment last week, and the lady was holding the baby on a Zoom call, standing at the kitchen counter, and I was like, can we talk? Yeah, I'm just on a Zoom call here,
Right.
Okay.
Yep. Working from home again. So yeah, it's interesting. So one quote we heard that we thought was pretty cool and pretty interesting, and it makes sense, is you could sell too soon, but it's better than selling too late. So good point. If markets are higher, you could sell too soon before you hit the peak, right? But it's better than selling too late when maybe it comes back down. So it's if you're ready to sell and it works for you in your situation, now is the time to sell. And so,
one other thing we noticed, it's been a crazy market over the last probably year. There's a shortage, not only for home buyers, but for flippers to find distressed property. It's
Yep.
been much more difficult because of the loan modifications and everything. And so even things that aren't very nice go in, you know, one house in Bloomington, I know I made an offer on 85 offers, you guys, and it was a wreck. 85 offers. Can you imagine? Now that was last year. It's softening a little bit. You're still fighting against those cash offers, but the days of selling as is, and you know, he sold one not too long ago that was pretty crummy, and you know, someone died, it's an estate, it needs work, you know, like that. But you can put it on the market and sell it pretty easily because there's enough people and demand, and someone can see past a little bit of wallpaper. It was super easy fix. So you can get top dollar even for something that needs work, but that's going to be over real fast here. So if you have something that needs work, get it out there.
Yeah, we've seen that. And like I said, I have a property that was listed not that long ago that needed a little bit of work. But again, this market, you could throw that out there and you can get top dollar for that. That's not going to be the case as there's less and less, you know, demand out there. That's going to change to where it's going to kind of go back to where it was. And not that doing those fixes wouldn't potentially help, but it's definitely something that you're going to have to probably do here soon again to get that top dollar that you're looking for as a seller. So that's kind of from what it. So I mean,
I have one more stat that I know I
Go
didn't
for it.
share, so go put your questions in, but I have
any
one.
questions in the chat?
I have one about, and I don't see it here. It's about, and this one shocked me. People today have way more equity in their homes than they ever did before. And I had the rate, but I don't see it right here. It was astounding. And, you know, even during the pandemic, you have to think people saved money. Maybe they were unemployed, but they still got paid, and then they didn't have anywhere to go to spend it. So people have a lot of equity right now in their homes, more than in history. And it was way back.
Well, that's the difference. That's another difference we didn't even bring up between now and the 08 crash. Is back then people didn't have equity. That's one thing they should have actually added to the slide is people didn't have equity back then. People have equity now. So that's another big difference in why this is different than then. There's another graph we saw that was interesting, and we didn't put it on here. I wish we would have, but it showed prices historically, basically going back to like 1945, World War II time. And it showed the graph, and it basically showed house prices historically have gone up all throughout the year, almost the entire time, except for that one dip in 08. But house prices have basically risen the entire time, which was kind of an interesting graph to look at, to see that, wow, prices have risen for a long time over, and just that one drop really in the 08 period. So
I saw one other number. The national loan to value ratio is about 31%. That is sort of talking about that equity. Lowest in over 3 decades.
wow.
Yeah, pretty amazing. So let's see,
So what questions
how are we
do you
doing on
guys have,
our
Ryan?
questions? We have seen the same with several of our renters. Okay, somebody's agreeing. Renee, yeah.
Yep.
Cool. Put your questions. Anybody got any questions?
Yeah, is there any? Yes.
Brandon sold a house in Eden Prairie at 408, bought 2016 for 230. Yeah. Like, is that crazy? You know, is there any signs that interest rates or inflation is slowing new buildings?
One thing that's interesting about new building that's slowing new buildings, so there's been a supply chain issue, which is getting somewhat better. The other thing that's slowing building right now, though, is a lack of labor. So in the industry and construction, they're looking at projecting out this year that they're in construction across the whole country, that 1.3 million new people are going to be added to construction, but they're going to lose 1.2 million throughout the year. Maybe I got those numbers mixed up, but basically the same amount is going to come in as go out. And a lot of people are going out for other industries and things like that, but they're short like 650,000 people right now in the construction industry nationwide. So there, there's a shortage of homes, shortage of supplies, prices are increased, plus, so they're trying to make headway. I just did a cross-country tour of the states, went from Pennsylvania all the way back here to Minnesota, driving my daughter back from college. And I saw a fair amount of building going on, but there's not a lot of starts going on. So there's building that's happening, but there's not as many people aren't starting building as much. So there's a shortage there of labor and supply. So that's really kind of what's driving that more so. But inflation is playing a part though too. We're missing some.
Oh,
of these
good.
questions.
Brandon's got his home builders are
That
still
was-
going strong.
Yep.
And it's a lack of supply. Yeah, it's hard to get the materials.
Yep.
So it holds you back.
Well, most of the new construction I am seeing is townhomes and apartment buildings. Why is that? I would say it's just a number of, I would say it's a housing need. People are
Yeah,
getting
it's a need, yeah.
affordable housing. I think is probably what's driving that.
Well, Brandon, the guy who answered, right, he's a banker. The banks are willing to lend the money on those apartment buildings and the townhomes, new construction, no problem. The funds are there. Scalability, great answer there. Scalability, you bet. And yeah. I still like where they were turning the old defunct shopping areas that are closed into some sort of housing, and that is being done. And you'll see some modular housing too. Boy, did I learn about modular housing. I just sold one. It's complex. It was a modular basement with a mobile home on the top. How about that?
Yeah, that was an interesting one.
Whew. Did you know mobile homes were registered with the Department of Motor Vehicles back in the day?
Yeah.
Always something to learn in this business, that's for sure. So, okay, more questions? Anybody? We're here. Oh, we got something over here okay. Yeah, are you seeing any correlation with people moving to the suburbs and inventory on multifamily houses? Oh, that's interesting. So maybe Graham, let's see. Yes, people are definitely moving to the suburbs. Even COVID has got people saying, wait a minute, do I want to live in, the inner city in an apartment building? So they are moving to the suburbs, but is that affecting inventory on multifamily houses? The vacancy rate is not rising. It's still very low and staying low, and people are renting, so we're not seeing that change. There's still not enough. That's just it. The population has changed where they want to live, but there's still not enough inventory. We're back to that.
So Brandon says, we as bankers in general still sitting on a record piles of cash due to consumers being flush with cash in their accounts and from COVID relief. So yeah, that was one of the things that we saw a lot was, people have money in the bank. I mean, like LeAnn said, you're getting stimulus checks, you might be unemployed, but there was people that were making more money on unemployment than they were working. So you're making more money sometimes, you're getting more, money from stimulus checks, and then there was nothing to do. You would have had to stay home because nothing was open. So a lot of people were just banking that money.
Yeah.
And so now they were ready to spend it. So that's why we've seen an influx in everything. That's why inflation's gone out of control.
Yeah.
And that's obviously affected housing as well.
Oh, Renee, that's a good question. Wonder why we have high inflation. Boy, a lot of articles to read on that. There's a lot of reasonings. The pandemic has changed society in many, many ways, but I love what Brandon said there. Bankers are sitting on piles of cash. So if you're thinking about building or, investing, they're there. We actually, I've done real estate a long time, and they say the doors are open or the doors are closed a lot of times with banks. They're open, but you got to be creative and figure it all out, and be a smart investor. That's where I wonder, some of the multifamilies I've seen for sale here in the Twin Cities market and even other markets, they're so overpriced. There's no cash flow there, and they're getting multiple. There was a fourplex in Egan, I think we wrote on maybe 2-3 weeks
It was
ago.
a 5-unit actually. Yeah.
Oh yeah, 5. There you go. But oh my gosh, gazillion offers, and
Yeah, it's crazy.
There's a point where the numbers don't work anymore, but there's so much cash available. People are buying, or they're coming out of a 1031 exchange. They want to put that money into something, so they don't care if they overpay right now.
Right. You said the banks are wide open for qualified buyers.
Yeah.
So making sure that your credit score is good, your debt to income ratio, all those things, are in line, because it's stricter than it was back before the crash. So Lisa says, with steel and wood prices being so high, labor is only part of the problem. Exactly. You're absolutely right. There is other factors in there. So labor is only part of the problem for especially like new construction. They've got a lot of issues that they're dealing with, not just in prices going up, but just in supplies and things like that. My parents were, they actually backed out of the deal because other things happened. Long story I'm not going to get into, but there was a little bit of delays in building. They were going to buy a new development, and there was delays in that, and just getting the supplies there are difficult. So new construction, when you're looking to get into a new development, you kind of expect delays right now. Plus prices obviously have pushed everything up.
We're seeing people who sold their house and they're building, and they want extensions because they want open sort of closing dates, because they don't know when that new house is going to be really ready.
Yeah. We've seen that more and more where houses are hitting the market. And we've seen that more and more people are getting into new development properties where that's a thing, but they need that extension. They need time to, they might close at a certain date, but that doesn't necessarily mean that's when they'll close. What did Brandon say?
Brandon's remember, Brandon's a commercial banker. He says why the banks like apartments and townhouses, and I 100%, this is why investing in multifamily is smart. You have more than one person to pay that mortgage. So if one unit's empty, it doesn't knock down the fort. Okay, so multiple cash flows for one property. That's what the bank's looking at. And they get that if one's empty, it's okay. There's only one roof. There's only one furnace. It's easier to scale right there. Yeah. The cash flow, and a lot of the renters want to buy but can't afford, so they might as well live in a nice modern new construction type building. Yeah, that's my daughter. She moved to, I call it a millennial apartment. It's expensive, but it's swank. That's what they like. Okay, we're going to move on here. Thanks, everybody.
Yeah, thank you very much
for joining us today. And I hope we helped answer some of your questions. And we have one more slide here. If you want to book a strategy session with me, you can do that. I go to LeAnnRiley.com. There's a section over there called Realty Group. And then there's buy, sell, invest tabs. Just want to chat real estate, push one of those and you'll be able to see my calendar and schedule an appointment, and we can chat real estate.
Mm-hmm.